Is the market uncertainty behind us, or should investors expect more bumps ahead? Well, joining us now, Carson Group Chief Market Strategist Ryan Detrick and BD8 Capital Partners CEO Barbara Doran. It's great to have you both here. Ryan, I'm going to kick this off with you. Yeah. You're here with me on set.
Yes.
You were bullish back in mid to end of April. It was a contrarian call at the time. Yeah. You're still bullish. Why?
We are. First off, thanks for having me in person. This is neat to be here like this. This is fun. There's a couple of reasons. I think just look at today. Look at today. I hear all these people saying breadth is weak, market breadth is weak. But, Morgan, when you look, we're in all-time highs on the S&P 500 advanced decline line, on the NYSE advanced decline line. All 11 sectors in the S&P 500 are above their 50-day moving average. To me, that says there's a lot of breadth. And one more thing, I don't know if I've heard this mentioned yet today. That bond auction was pretty solid. Remember 3 weeks ago we had that bad bond auction and the stock market sold off, yields went up, nobody wants to own the United States? Well, today it came in really solid. So there are some real positive things to say to us. This bull market's alive and well.
Barbara, do you see it the same way? Is the bull market alive and well? Would you be buying here?
I would not be buying here, but it's hard to argue with Ryan because things right now do look pretty good. You just had the PPI today, excuse me, and CPI yesterday. Inflation continues to come down, but you are clearly seeing signs of a slowing economy with job growth. And no matter where you look, whether it was the jobless claims higher than expected today, the continuing claims the highest since late 21, you look at manpower stats, job openings down, posting, the non-payroll. So you're clearly seeing a slowdown there. And we do know that the tariff impact has yet to be felt. I mean, it was only just in early April that we had the widespread tariffs and the ones that were shocking in number. And so you're just going on May data. And a lot of companies did do forward ordering, so they have their inventories. And if you listen to the Beige Book, the Fed Beige Book last week, they talked about anecdotal talks with businesses who said they expect to be able to pass costs on by August. So we haven't seen it yet, and we don't know what the impact will be, which is why the Fed is on hold and why they're saying we need to see more. But right now, the market could move higher, but at 22.5 times forward earnings, I don't think there's a lot of upside. And again, with all the uncertainty still out there, I find it hard to see that there would be new highs in the market as on the indices.
We just had 2 straight days, Ryan, of encouraging inflation data. Jobs, I realize continuing claims came in higher than expected today. We've been seeing that. But in general, the hard economic data has been solid. Is that an encouraging trend, or is it the calm before the storm?
Barbara brought up some great points here. There are clearly some cracks. Like you said, labor market, maybe there's some little cracks in the foundation. But overall, we think the economy is still pretty solid. The consumer is still solid. Look at confidence, right? Consumer confidence recently jumped. Small business confidence jumped. And CEO confidence jumped. I know before I came on, you teased the up 20%. So I'll talk about that for a second. S&P is up 20% the last 2 months off those April 8th lows. We know that. Only 5 times in history have we found the S&P 500 up that much in a 2-month period. Off the lows in 74, off the lows in 82, 2009, 2020, and then late 1990s in. And what I'm getting at, this blast of strength that we've just seen is not consistent with a short covering rally or, just this bear market rally. It looks to us like, I know it sounds weird to say, like almost like the start of a new bull market. I would disagree. I think we've been in a bull market since October of 2022, but we're just getting going again, and this still looks really solid to us.
Barb, I want to get your thoughts on tech and what we've seen, whether it was Oracle yesterday. We just got some pretty strong results from Adobe that the market does seem to be digesting. Microsoft trading at a record high. I could go down the list.
Yeah. Well, I think all these companies, what they have in company, it's really the AI play. And that was even with Adobe was the big question. They're adding generative AI into all their products. They're sort of phasing it in and trying to scale it up. And so as we talked earlier, we haven't seen the in-depth numbers here, but that's what's happening with Oracle, IBM. They're really getting it right. And the demand, and so many people have said, and I agree, that we are in the early innings of this AI phenomenon, where people are still figuring out how to apply it, and where they are seeing big efficiency and productivity improvements with their businesses. So I think that continues to be, and will continue to be, the underlying theme, and that will ramp up. And I think these companies have a lot of them have long runways of growth.